Anyway, you can see the market's reaction to the expectation the Reserve Bank won't raise interest rates tomorrow. In fact, perhaps no more in this economic cycle. The ASX rate tracker says there's now a 98% chance that rates won't be raised tomorrow, and the yield curve suggests the first rate cut here in Australia will come in early 2025. But inflation at a first glance does not appear to be beaten. The RBA admits strong migration clouds the economic story. Warren Hogan is an independent economist and a consultant of the small business lender Judo Bank and joins me now. Warren, this is it. The markets are now saying, well, rate rises, any talk about any rates suggested, it's all over. That's what the markets are saying.
Yeah, certainly, Ross. Thanks for having me on the show. It looks like what's happening in the US is driving everything. That is the big rally in interest rates, bond yields. The 2-year interest rate in the US is down 75 basis points in the last 6 weeks, which is effectively saying not only is the Fed done, but they'll be cutting aggressively. And of course, we've been caught up in that. I think the RBA is in a very different situation to the US and other countries as well. And although they will probably pass on moving tomorrow, as is the expectation, I think there's many economists who still think they're probably going to have to go again. I do. I think there's another move at least in February because this economy is lagging. It's behind the rest of the world, behind the US, and we saw it in the data that we've seen over the past week. And we've had a lot of data. It's telling us that there's still inflation in the system, albeit less than there was, and that the economy is holding up pretty well in the face of the rate hikes.
We saw it just a moment ago, and that was the yield curve, effectively giving some view as to where rates might move to in the future, the cash rate in particular. And it seems really it's at least 12 months out before money markets right now are pricing any rate cutting. We can see it here on the screen right now. What's your own feeling on that?
Well, I think that's actually quite a rational pricing from the market. I don't think it's pricing in the risk of another hike enough, but of course it's very much different to the US, where the market's saying we're not going to get a rate cut here anytime soon. Sure, it's starting to price one in for early 25, but that's so far off in the distance, it's not really that relevant. So the market here is actually saying higher for longer, but the risk, of course, is that the RBA's hand is forced, as has been the case throughout this past year, and they've got another 1 or 2 left in them. So I think the market pricing is still a little bit at risk of reassessment early next year.
Okay, so tell me one aspect of this, and that is higher for longer. That's pretty easy to say, but of course what it means is that people have to live through that. So therefore energy prices not likely to come down soon. It's not as though we're seeing deflation in most parts of Australia's economy, which would drive down this inflation rate short term. There's not much evidence of that right now.
Well, that's right. And even today's data that we got with the business indicators ahead of GDP on Wednesday showed the wages across the economy rose 2.7% in Q3, almost 10% in the year. Now, that's both the amount of jobs as well as the hourly rate, but we have got inflation still in this economy. And of course, you know, it's holding up well. I mean, sure, consumers have tightened their belts, but we've got a lot more people in the country propping up the retail sector. And of course, the construction side, you know, it's booming. You can't really describe it as anything else. We've got a record amount of non-mining infrastructure investment going on. So look, there is still a lot of risk of inflation here. We're behind the rest of the world. And I think the expectations that the Fed will be cutting early next year are too aggressive. I think that's the market getting ahead of itself, but we're not going near rate cuts anytime soon.
But it is really interesting looking at the market reaction, looking at the movement of, say, gold we're talking about, looking at the movement of the Australian dollar in particular as the rates differential between here and the US would tighten up. These are the things that drive markets, aren't they?
Oh, they're driving them now. And, you know, I actually am quite nervous about the way gold and Bitcoin are moving up. It's obviously in response to lower long-term interest rates in the US, but it shows you how much money is still sloshing around the system. Equities are moving higher. And of course, that's in potential inflation down the track. So, you know, these economies are a long way from being in recession. And of course, it seems to be a long way from any major issues in the financial system with how all these different markets are performing so well.
Okay, I've got 15 seconds. What's the Reserve Bank do tomorrow? And does it give us any change of its language?
No change. Still hawkish, but they won't move. The big risk is that they go.
Warren Hogan, always good to chat to you, and many thanks for your time on the program today.
Thanks, Ross.